welcome to CNBC TV18. You have a whole host of banking companies that are reporting their numbers today. Dhanteras, happy Dhanteras, surely. That's where we save our dhan, and they are going to tell us whether those dhan that they've kept saved for us is good or bad. But viewers, we're going to take you all through all of that, and Gaurav is here with me as well. He's a banking analyst to take us through those numbers. Gaurav, in terms of the latest ones that have come in, is ICICI Bank. How was the number for ICICI Bank? Two big private banks that have come in so far. HDFC was good, but ICICI Bank, what are the numbers?
Well, when you look at ICICI Bank's numbers, we've already seen that ICICI Bank also reported good set of numbers. In fact, net interest income, that was in line. But at the same time, that is something, non-interest income, that is something which actually impacted the PPOP growth. It was although in line, but if we exclude the treasury income, it was stronger than what the street is expecting. When we look at the provisions now, that is something that came in as a positive number. Provisions declined and it was lower than the street's expectation. And as a result, when we look at profit, now that has increased almost by 5% on a year-on-year basis, which is again higher than the street's expectation. Let me tell you one more factor. When we talk about net interest margins, last quarter there was a cushion of around 7 basis point. That was a one-off cushion. This quarter, street is expecting around 13 to 14 basis point of contraction in net interest margins, but bank has delivered just 4 basis point of contraction in net interest margins that have come into just 4.3%. So that is a big positive for ICICI Bank. In terms of loan book growth, we have seen the loan book growth of around 10.3%. It is a bit lower than the trajectory that we have seen for ICICI Bank so far, but it was again in line with what the street is expecting. Deposit growth that came in at around 7.7%. Now, what we will be watching out on is the commentary on net interest margins. Is there any one-off in this quarter as well? And at the same time, any commentary on the asset quality as well. But all in all, in terms of number, it looks like good set of numbers delivered by ICICI Bank in this quarter as well.
Okay, good set of numbers that is delivered by ICICI Bank as well, Gaurav. So this net interest margin that came in was a positive surprise. You were expecting a sharper fall this time.
Right.
And that has just come in as 4 basis points in terms of a contraction.
Right.
So not much of a worry there. That's a positive surprise there as well. And I believe HDFC Bank also good numbers, right? NIMs also were good there as well.
Well, yes, when we look at HDFC Bank, when we look at the numbers, net interest income, that was in line with the street's expectation. PPOP is something where we saw the beat coming in, and this was because of the non-interest income. Now, when we look at some of the factors for the non-interest income, it was trading gains, which is something driving this beat specifically in this quarter. And as a result, when we look at profits, there also we saw a beat of around 6% if we compare it with the street's expectation. When we look at asset quality, we do not see any signs of worry. In fact, the calculated credit cost that comes to around 0.5%, which is in line. If we look at net interest margins, they also look in line. But at the same time, there is one thing that we will be watching out from the commentary is that the LDR ratio. Now, that was higher than 98% in this quarter. Remember, management earlier said that they want to keep it between 85 to 90%, or rather, they want to bring it down to 85 to 90%. So we will be watching out on how the commentary is going to be. But specifically in terms of number, good set is what they have also delivered in this quarter. We will be watching out on how their commentary is going to be on trading income specifically. But yeah, good set of numbers from this bank as well.
Good set of numbers from HDFC as well as ICICI Bank. Running out just through the numbers, HDFC Bank, this time in terms of the asset quality, when you look at it in Q2 FY26, the GNPA is at 1.24% versus 1.40%. So yes, improvement in terms of asset quality that we're seeing coming in for HDFC Bank. NNPA too is seeing a slight bit of an improvement there. For ICICI Bank too, look at the NNPAs that have come in as well. Slight bit of an improvement there in terms of 0.41 last quarter. 1% last quarter for ICICI Bank, and this quarter it's 0.39% for the asset quality. So again, improvement there in terms of asset quality overall for both these large banks, and this somehow will give us an indication of what to expect from other banks as well. Both of these banks have seen a beat coming in. When we've spoken to a lot of, market experts, they've said that the banking and the financial side is also expected to start doing well. And that is why they've been bullish on this space. So yes, banking side, good numbers. We could see positive moves coming in here as well, given that the NIMs is something of a better than expectation, whether you look at ICICI Bank or HDFC Bank. So yes, let's hope for some green coming in here on Monday from these two banks. But other than that, there are smaller banks also that have reported their numbers. First up, Gaurav, Yes Bank also has come in terms of numbers. Obviously, we had the recent news flow that came in terms of and the acquisition side, more fund side coming in as well. So Yes Bank is something that we should be keeping an eye out on. Overall, seems like an inline number that we could say coming in for Yes Bank.
Well, yes, when we look at S Bank, if you look at the numbers, net interest income, that increased just by 5% on a year-on-year basis. It was in line with what the street is expecting. Let's go to the PPOP, which is pre-provisional operating profit. Now, this is something where we saw a strong performance from Yes Bank, and this was specifically because if we look at the operating expenses, those were low. Now, pre-provisional operating profit that increased almost by 33% for Yes Bank, and that is something which was positive. When we look at provisions now, that is an area of concern because we have seen provisions increasing almost by 48% on a sequential basis, and that is the reason why if you look at profit, now that has come in at around 18% growth on a year-on-year basis. Although if we compare it with the consensus, for some it will be beat and for some it will be missed. But at the same time, let's not forget provision is something that we will be watching out for. When we look at the ROAs, now Yes Bank's ROAs came in at 0.6%. That is also something that we will be watching out of because street specifically is concerned that when Yes Bank reaches that 1% ROA mark, so that is something that everyone is watching out for. Remember, they have shown a strong set of numbers in terms of deposit growth, specifically because of the CASA growth that we have seen in this quarter. So that is something that we will look out at how it will play out. But at the same time, in terms of numbers, inline set of numbers is what we can call for now. PPOP was definitely strong, but at the same time, how profit and how the provisions are going to be and how the commentary is going to be, that is a key thing to watch out here, specifically for Yes Bank.
Okay, key thing to watch out for here in terms of Yes Bank. Gaurav, I'd been speaking to a couple of fund managers and CIOs recently as well. They too highlighted that financials is a good space. So Ashish Gupta, he said recently to us as well that financials is something that he would look at as a theme for someone 2082 as well. So that is something exciting. Good numbers, surely positive on that front. Even Ajay Khandelwal of Motilal Oswal AMC too highlighted similar things that, financials is where they expect to see growth coming in or leading in terms of growth going forward as well. In terms of expectations, they have strong expectations for Q2 FY26 from financials, and that's where maybe we could see better growth coming in, and the expectation over there is much higher. As of now, they're managing to deliver this, and that is what we'll keep an eye out on. But